Let me read down small. I won't go live. Just small. You're live. You're live. You're live. You're live. Hey, money. So you're live. You're live. You're live. You're live. You're live. Good morning, Riser traders. Good morning. You're live this morning. Yeah, we're live. We're live. Good morning. We're live. If you can hear me, type on the chat box. I can hear you. Good morning, Riser traders. Today is a great day. Ready? Today is a great day already. Today is a great day already. Today is a great day already. If you can hear me, 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 send on the chat box. I can hear you. I'm not at home. I just had to quickly do this morning. Right. So can't give excuse. So anyway, I am. I have to do the class. I have to do my 7 a.m. analysis. So it's a sacrifice, but you gotta push, right? Even on the desert, I will do them. So long as there's sockets, to charge my system and the internet. So this morning we are going to just build our affirmation, right? So while I was having my prayer walk this morning, some words dropped in my spirit, which I will share with us as affirmation. Okay, the first word I want to say to us is I trade with simplicity and ease. I trade with simplicity and ease. I trade with simplicity and ease. That's the first word that came to me this morning. I trade with simplicity and ease. Everybody type on the chat box. I trade with simplicity and ease. This morning we are not playing affirmations. We are going to speak to ourselves. We are going to build our affirmations ourselves. So the first word for us is I trade with simplicity and ease. What you say is what you would see. Trading can be hard for others, but not us. Trading can be difficult for others, but not us. As wiser traders, we trade with simplicity and ease. You have to affirm this word to yourself till it gets to your subconscious mind. Like I always say, we are not saying these words to go and sleep. We are saying these words to work. So our words, they are framing the atmosphere for us to trade with simplicity and ease. This is not motivational speech, right? This is not motivational speech. So that's the first belief. We said yesterday that trading is not hard, right? We're going to add one more, is it clause or verb? Trading is not hard for me. That's the next one. Don't just generalize it, personalize it. It can be hard for others, oh, but for me, trading is not hard for me. That's the next one. Trading is not hard for me. The next one is trading is simple to me. Trading is simple to me. Trading is not hard for me. Trading is simple to me. This might look so so insignificant. We are doing something powerful to your mind. Even if today is your first time of learning the skill sets, even if today is your first time of learning this skill, this is the foundation. In fact, I advise my students before you even come to learn skill, you have to first you need to first have the mindset and the habits. It's a be, do, have formula. You can't change it. Be, do, have. Before you have the results, you must do, right? Before you do, you must become. So the mistake traders make, I've seen from my 6 years of experience, is traders go and learn the skill sets. They go and get the tools without first becoming the trader. That's why when you are learning, get stuck. You lose. You now say, oh, there's something called psychology. You now remember after losing, after blowing accounts, you now remember there's something called psychology and risk management. Whereas that should have been the foundation to build your mindset, to develop the right habits, right? Then as I learn the skill set, it becomes simpler and easy. So those are the three words for us this morning. I trade with simplicity and ease. Trading is not hard for me, and trading is simple to me. Those are the words for us this morning, and so shall it be. As we say it, we will see it. It's a natural principle, whether you are a believer or not. This is a principle that governs the universe. This is a universal principle. Believer or no believer, believe in God or not believe in God, this is principle. Just like if you jump up with your praying in tongues, you first come down first. If you jump up now, you first come down first. Law of gravity. So there are principles that governs the universe, right? That applies to everything we do. Having said that, let's go to our chat. Yesterday was a great day. Yesterday was a great day. So, very briefly, I want to know if my new student is here. The guy I just joined yesterday, right? I'll just say that what we do every morning here is what we do in the mentorship. So I just come to just reiterate to sharpen what we do every single time. So if you want to have a proper understanding of what we do, if you are just joining for the first time, you have to join the mentorship, right? And I make it so affordable to everyone to join, right? I'm not about the money per se, although money is good. I need money, but I'm much more about the impact and the knowledge, much more than the money. So don't be scared that the money is too much. Whatever you have, send a DM. We can talk about it, right? I want you to have this knowledge. That's the cocoa. So if you are just joining for the first time, you need to come into the mentorship to have the full understanding of what we do. Direction, location, confirmation, accumulation, manipulation, distribution, pullback. And what's the last one? What's the last one, everybody? We have three: direction, location, confirmation, accumulation, distribution, pullback. What's the last concept or the last model? Talk to me, talk to me. What's the last concept of the last model? PD, yeah. Premium and discount. Premium and discounts. Premium and discounts. Yeah. So this is what, at least there's still more deep one, but I don't want to go deep. This summarizes everything that we talk about. If you can't, I say something every time. If you can't break down your system into 3 or 4 steps, like everything you are doing, if you can't bring them into 3 or 4 steps, it's too complex. So you need to find a way to, okay, summarize all your strategy, your concept into 3 or 4 steps, so that even a 5-year-old can, okay, oh, this is what we do. So for direction, I say that what we do here is what? Trend identification. For direction, all we are doing here is what? To identify the trend of the market per time. Per time. So trend identification per time. Trend identification per time. And I said that for this trend, it is relative in the sense of the time frame and the type of trader you are. Trend identification is relative depending on the time frame you are on or the type of trader you are. Because you can be selling, but that sell is a counter trend and you are making money. But if you are lost in that counter trend, you'll be trapped. When the pro trend begins, you'll be trapped. So whilst you are trading a counter trend, which I don't talk down at counter trend, because if it's a very visible or viable opportunity, of course you can take counter trend. Imagine EU was selling for 4 weeks, but it was counter trend. You can't say you want to wait till for 4 weeks. Some traders do it. Those that are swing traders or they hold positions, they will wait. They won't enter. They won't trade for that 4 weeks. They will wait for it to come down to that demand zone and they buy. But we are day traders, and I say for day traders, we pride ourselves in flexibility. We take both buys and sell positions. So we trade counter trend smartly and we trade the pro trend. So we need to know that for this trend, right, we need to understand, are we on a counter trend or we are on a pro trend, so that we will not be trapped in the lower time frame, right? That's under direction. Okay, and under direction, we say that the concept we use is what market structure, and there are three phases of market structure, but we only use two to trade. There are three phases of market structure, but we only use two to trade. The first phase is uptrend, second phase is consolidation, while the last phase is downtrend. I'm just giving us a recap for, we might have new students every time we join, so I don't want to assume that we are OGs. So just bear with me. And I'm very sure that even if you are no students, something will also stand out. Even if I repeat the same knowledge, you can testify. Every time I say the same thing, something as if one thing is still missing. Is the law of universe. There's always a room for it. Even me, I'm still learning from direction. Every single time I teach direction, I still learn something new. So you cannot exhaust knowledge. So don't come to the point where you think you know markets. No, you will never know market finish. Oh. You are building on your knowledge and gets you deepened, right? So uptrend, consolidation, downtrend. That's under direction. And the beauty of this is once you have gotten it, you have gotten it for life. So under direction, there is nothing more to understand than knowing that there's what is called uptrend, consolidation, and downtrend. So your job is now to now ask yourself, can I now master and spot an uptrend? Can I now master and spot a consolidation? Can I now master and spot a downtrend? Once you are done with this phase, that is all. Move on to location. So how do we know an uptrend for my new students? An uptrend is simply where you are having a series of higher highs and higher lows. So there is a label. We always label our trend so that we will not, it helps us. Labeling helps you. Okay? Don't form Bado. Label your charts. My students knows us for that. We label our charts. We don't form Bado. Even me, I label my charts. You don't use your head to think it. Don't think it. Label it. Somebody write on the chat box. Right? Don't think it. Label it. Don't think it. Label it. Oh, yeah, right on the chat box. I love engagement. Don't what? Don't think it. Do what? Label it. Everybody, don't think it. Label it. So we label our charts, our trend, and also we draw it in our notes. Okay, what it helps commit it to memory. Anything you pen down, the psychology of writing things, that whatever you write down, like handwritten, not on your phone, whatever you write down you commit to memory. Who got that? Whatever you write down you commit to memory. Whatever you write down you do what? You commit to memory. So don't just think about it. Draw your structure on book and label it. You are doing something to your memory. You are committing it to memory. All right. So don't think it. Label it. So my low, my high, my higher low, my higher high, my higher low, my higher high. This is how to spot an uptrend. Okay. All right. Whereas for a consolidation, we just have two phases of the market. We have what is called the resistance and the support. Uh, okay, for consolidation, we have 2 points of interest. Okay, resistance is at the top. Resistance is at the top. While we have support at the bottom. Support at the bottom. Now, when market is ranging, I love it because there's usually what is called manipulation, right? Liquidity when there's a ranging market. Because what price is doing is we are accumulating orders. Okay, when you say consolidation, market or price is what's being accumulated so you can liquidate and distribute. Okay, when we see price like currently, what we can see, let me come to the chart now. Let me give you a practical example. Currently you can see that price is what consolidating. Can you see now? Price is what consolidating. So we expect to see a liquidation for the upside, then distribute to the downside. If we want to distribute to the downside. But first, for us to be sure what to do, we have to see a breakout from this range. Okay? For us to be sure what price wants to do, we have to see what a breakout. So when we see a consolidation, our job is to wait. When we see a consolidation, our job is to what? To wait for a breakout. That's that. Let me not speak too much on that. Then let's label our downtrend. Our downtrend, we have high, we have low, money. We have lower high, we have lower high, and we have what? Lower low. Right? So this is a series of downtrend. It must be clear. If it's not clear, it is not there. I love saying everything. If it's not clear, if you are not seeing on the chart, if you are not seeing price giving you higher lows, just leave it. If market is doing anyhow, it must have a clear, we call it CSM. There must be a CSM. What is CSM? My OGs. What is CSM? There must be a CSM in your chart. What is CSM? Your best trade are your simplest trade where there's no stress. Like the one we took yesterday. Morning, sir. Yesterday, the trade was just so seamless. For me, it was a simple, let me not say it. What is CSM, guys? What is CSM? Those that are my OGs. CSM. Yes. Whatever you write down, commit to memory. I love that. What is CSM? Who's answering that? My OGs. What is CSM? Clean. Which of the clean? Homo or say na clean. Clean structure movement. Yeah. Okay, I write it one by one. Yeah, clean structure moves or clean structure movements. So CSM is clean structure moves. Clean structure moves. Right? Or you can even say clear structure moves. Still works. Clear or clean. Because it has to be clear. It has to be clean. If it's not clean, I'm not interested. That's the challenge of traders. They want to trade everything. Must you trade? If market no clear, leave am. Tell somebody if market no clear, leave am. If it's not clean, leave it. There must be a clean structure movement. We are saying that the market is giving you a series of high, low, high. You will see it. It's there. Let's come to the charts because I'm tired of we are trading what is not there. Let me hide all my tools. You will see it's clean on 15 minutes. Mind you, 15 minutes is your minor structure where you see clean moves, right? For a lower time frame, you must see clean moves now. Swing low and Pick it from the swing. You pick the swings. Also know that you pick what? Just look at this structure going up. This is low, this is high, this is higher low, this is higher high, higher low, higher high. You see it clean, all right? And if you're also coming down, it will be clean. If it's not clean, just leave it. Look at, for the past 4 weeks when we are selling, we are getting clean structure moves. Anyone we know clean, we know clear, leave them. What did I say? Leave it. You must not trade every movement. You are only trading the clean ones and the clear ones. Okay? Once you see, okay, let me go back to my notes. That's the next thing for us now. Once you see a break of structure, let me come back to my notes. So we have gotten the direction of uptrend, this and downtrend, right? Now, so for a trending market, also note this. Note that, let me take this by the side. Every single time, we are doing just two things. We're either breaking structure or what? Changing trend. What I'm saying will help you when you come to your charts. I'm trying to give us, okay? Just follow me. You will get it. All everything will start making sense very soon. When you're on your charts, market is just doing two things. Okay? We are either breaking structure or what? Changing trend. And I'll show you what I mean on the charts right now. This is what market is doing every single time. Now, how do I mean? For an uptrend, see what an uptrend does. Low, high, higher low, higher high. This is a what? Break of structure. Okay? Break of structure. Market pulls back and takes out the eye again. That's what? Break of structure. So at this particular point in time, what are we having? We're having a break of structure. Are we together? So if you continue making higher highs, what are we doing? We are breaking structure. Is that clear now? If you continue having higher highs, what are we doing? We are breaking structure. Now, at a point in time in the market, there will be a change of trend. That means from the buying, we will now see that this will now be taken out. Bam. Once that happens, we maintain this low and break structure to the downside. So now we now have a change of trend. We are now breaking structure towards the downside. There must be a break of structure to the downside to confirm your change of trend. I repeat, there must be a break of structure to the downside to confirm your change of trend. There must be a break of structure to the downside to confirm your change of trend. If not, this might just be a liquidity. How do I mean? Watch this my chart. I am going up. I took out the low, but I still break structure to the upside. So this in this case is not a change of trend. This was just a liquidity to continue buying. But in the case where we had a change of character, right, and we now had a break of structure, that's a confirmation for a what? Change of trend. Is that clear? Okay. So let's come to our chart. Let me stop there. Let me stop there. To get more more updates or more information, join the mentorship. Right? I'm still opening. There's still room for the mentorship. Just send me a DM. Right? I give you a discount and you join us. Okay. So let's go to what we have for today. So what pair are we analyzing today? Of course, we are analyzing EU, my pairs, EU, GJ, GU gold. That's what I'm analyzing myself. Then you tell me the ones we should analyze. Okay. Now, yesterday, let's do a quick recap on what happened yesterday. A quick recap. on what happened yesterday. So we said that we are expecting this gap to get filled, right? Which means that we'll be having a sell. But we want to get the location and confirmation where we would sell from, right? So what did we do? We marked out the previous day high on Friday. This was the highest point price got to on Friday. So we marked out that high, right? And we marked out the low, the lowest point price goes to on Friday. We marked it out and we said that that's our what? Our range. This is Friday, right? We're trying to do a recap of what happened yesterday. So after doing this, we now drew out our premium and discount zone. Premium and discount zone. And it's interesting that we took out the eye for liquidity. Like I said yesterday, if you can't spot the liquidity, you will become the liquidity. So above every eye, we have stop loss of sellers and buy stop of buyers. I repeat, above every eye for liquidity, we have the stop loss of sellers. That means some sellers are selling here, we put stop loss here. I was almost stopped out too, but I took my, as boy we get sense now, I took my stop loss, I gave it a room to breathe. I took it a bit high to the previous day's high. Okay, I took my stop loss, I entered somewhere here. But for those that are selling from here, they put their stop loss very close, 4 pips. They would have been stopped out. All right. So at every eye, we have what? The stop loss of sellers. We also have the buy stop of buyers. How do I mean? Buyers that are trading break and retest. They expect that when price breaks out, they expect price to keep on what? Keep on buying. Right? So what they do is some buyers they will put buy stop orders above the eye. Okay? They put buy orders where above the eye and put stop loss where below inside there because they expect price to what? Price to buy. So both sellers and buyers, it go shock them because they have been used as what? Breakfast. They have been used as lunch. So liquidity must be understood. Liquidity is a concept that must be understood. This is not about strategy. This is not about I like SMC because we have some haters. Some people hate SMC traders. I don't know what is their problem. It's not even about this. This is the concept of the market, liquidity and structure. So liquidity, structure, demand and supply is what technically moves the market. Like when I say move the market, I don't mean that is your demand that make market move. I mean that the the effects of what happens at the back end can be explained by this concept. That's a good way to put it. The economical effects of the economy, Euro economy, Japan economy, can be explained by liquidity, demand, supply, structure. So, not understanding liquidity, not understanding structure, all right, not understanding demand and supply is at your detriment. Oh. Not understanding this concept is at your detriment because this is how we explain the effect of the big boys. To know the direction bias of the big boys, we got to understand structure, market structure. To know the intention of where they are buying or selling from, understand demand and supply and what liquidity. You understand? So these concepts are what will help you to understand to trade smart money concepts. So we saw that yesterday we took out the eye, and what did we do? We broke into the eye and gave a structure for a cell. So now we are now good to look at what we are now doing now. Look at look. Perfect, perfect, perfect. We now start giving what? A structural cell. Look at 0, 1, 2, 3. From this point in time now, We are now safe to what? To sell because we have gotten the direction for the sell now. Let's label together. High, low. After liquidity, we now got our structure. High and low, lower high, and what? Lower low. If I'm making sense, I have my love language, fire emoji. Scatter the comment box with fire, 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 fire. Fire, 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 everywhere, fire, fire, fire. After liquidity has been taken out, after the stop loss of the sellers and the stop loss of the buyers has been haunted, market now gave us the blueprints. So what we see is we want to see liquidity taken out, then give us a structure to sell. That's for selling. For buying, we want to see liquidity taken for the buys, then give us a structure to buy. This is how market primarily takes out liquidity and gives structure. For buy, takes out liquidity and gives structure. If you understand this, you are delivered. If you understand this, you are what? You are delivered. You are delivered. So, yesterday, I told us that direction is what? 0, 1, 2, 3 is direction. Okay? Direction is what? 0, 1, 2, 3. So once you have seen 0, 1, 2, 3, your location will be what? Number 4. Wait for price to and sell. That is all. And I told us that we have different type of location. Okay? We have supply zone. Wait for supply zone. All right, that's one location type. Number 2, we have Fibonacci retracement. Wait for price to come into Fibonacci retracement of either equilibrium or premium. Number 2 location is what? Fibonacci. Wait for price to come into what? Fibonacci equilibrium or Fibonacci retracement into what? 71%. Is that clear? Those are your locations to sell. So as price is pulling back, you are waiting for price to get into here and sell. Look at what price did. Perfectly. In this case, price pushed into supply. So let me delete this now since we are already clear about this. We have our high and lower high. So what did price do? Price used this supply. This is rally based job. My students will understand this. Okay? This is what? Rally based job, a supply zone. This is a supply zone. It even took out supply zone a bit safe. Okay, even took out supply zone a bit. So if you are not careful, you'll have been stopped out again from here. And you think they're following you. They are not following you, it's liquidity. It's liquidity, they're not following you. So anytime you are getting your liquidity, always put your stop loss, let it breathe. Don't put your stop loss too tight. Okay? Don't put your stop loss too tight. So those that are trading from 71%, they got into the trade, but your stop loss must, if it's here, you'll be stopped out. So my advice is after getting your normal stop loss, add 2 or 3 pips. For example, on this trade, we'll have gotten a 4 pip stop loss. But because of liquidity, we don't know if, like now, this particular trade, we went as far as taking out a bit of 100% and so. So in this case, if you add 3 pips to 4 pips, you have 7 pips, or let's just say 6 pips. Okay, 6 pips, okay. Okay, but if you are just using the normal pips of your stop loss, you might be stopped out. So to be safe, always add 2 or 3 pips to your normal stop loss. Is that clear? To be safe. Sometimes it won't get to you that your extra stop loss, but to be safe, always add two or three because you don't know if it's that particular time that market will now do what it wants to do. All right, and we sold. So that was yesterday's trade. Is that clear? Took out liquidity, gave us a sales structure, and we sold. That was for yesterday. Giving us a structure. It has broken out of what? Our structure, right? It has broken out from our structure. Okay. What do we expect to see? A buy. That means we need to see more buys to take out liquidity into area of supplies to sell. All right. So let's mark up today's. Let's look at today's trade. Let's see what we're expecting today. What we're expecting today for Euro USD. As usual, what do we do? Yesterday, highest point was where? Was here. So let's mark out. This was the highest point for Monday, right? And we know Monday is meant for what? Accumulation. Monday is meant for what? Accumulation. And this was the lowest point for Monday. Lowest point for what? For Monday. Lowest point for what? For Monday. So now we have done what? We have boxed the price. No, not lower here. We have boxed the price. We have boxed the price into what? Premium and what? Discount. We have boxed the price into premium and discount. Alright? So what do? We divide this range into two. You can see that we are not surprised by his buying. We are in the discount zone, guys. Discount zone, we don't sell. Discount zone, we don't what? We don't sell. We look for buy opportunities into the premium. Discount zone, we have no business selling. No matter how the candle is giving us bearish movements, we have no business what selling. And I said every sell you see in discount zone is what? Is liquidity. Any sell you see in discount zone is what? Liquidity. So we are expecting to see more buys here. We need more buyers. We need more buyers. Okay? We need more buyers. We need what? More buyers. We need more buyers. A minute, guys. A minute, guys. A minute, guys. Yeah, I have some children. I'm in a church, so it's a school church, so the children are having their morning assembly. So just a minute.
Everything about you. Hallelujah. Baba, glory. Open your mouth and sing.
Yo, okay, so yeah, so you can see we are pulling up, 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 we are pulling up. Yeah. So we just wait, right? Patience, patience, patience. You can choose to buy at a detriment. We know that we still need to fill this gap, right? Who believes we feel that we still this gap still needs to be filled? Because if you look closely, you can see we have gap here. This gap needs to be filled. Even if this guy keeps on buying, right? That's not the right movement. It has to come and fill this gap again. Look at 4 hours. You can see how price jumped from year to year. So we have to fill this gap. So probably it's just trying to get to this supply zone to sell. All right. Look at also daily time frame. We jumped from when we closed there, we jumped to this place. Now yesterday closed with a rejection candle, which shows that buyers have lost treasure here. So we need to see value this drop, rejection, then a drop. Do you understand that? So everything is just saying we have to be patient. So we are sell biased. Okay. So look at our supply here. There's a supply zone here waiting for us. Supplies are waiting for us to sell. Do you understand? So we are waiting for price to get into our supply zones or at the premium levels. That's for what USD. Is that clear? That we have to have is for us to manipulate into demand zone to buy. The sell we are expecting is for us to into demand zone to buy. So, but because we are day traders, we take advantage of intraday opportunities. So what I'm seeing here is we tap into this supply, we sell into this demand, and we buy. Do you understand that? We tap into this supply, we sell into this demand, right? Then we what? We buy because we are bullish. The pro trend is what is bullish. The pro trend is bullish, but we need to see some pullbacks. Do you understand? So, what pair do you want us to analyze? I have to end this meeting now. Okay, just give me a one more pair for us to analyze, and we are done for today. Hope you have gotten value, right? If I end the stream now, we have done well. Please, can you show and mark out the daily previous candle? Okay, all right. So previous daily candle. Let me use another chart, so I'll not take off. Let me use ice trade. So you know what? Let me just delete everything here because I need to explain. Let me delete everything. So previous day candle, we close what? How did we close? The candle was still green, right? The candle was still green. So we are going to mark out the eye and the close. The candle was still green, so we mark out the eye and the close. The candle was still green, mark out the eye and the close. Then come to 15 minutes. So you can see money. So you can see we are expecting price to get into it. It's still the same thing. We are still on track. So we don't want to see price to break above this guy. No. We want to see price come into this guy and give us a bearish structure. Once I see that, we are selling. Can you see now? So this is my daily candle. This whole box here is previous daily candle. So as price is buying into my daily candle, on 1 minute I must see a what? A change of trend. Then I will sell. Do you understand that? Is that clear, Mr. Abbott? So let me also screenshot this. We don't expect to see this eye taken out. We don't expect to see this eye taken out. We don't. If it takes it out, that means the market is so always mark your eye and your low. Always mark your eye and your low so you know your zones. So this buy now make it just the go. No worry. Make it a go. You have no business with this buy. Alright? It's just pulling back, taking out liquidity into what supplies. Is that clear? Very clear. Okay, yes. Thank you. So I need to end the stream now so that I can. I don't like the way the noise is getting into our. So quickly, let me send. Let me just send this. All right. So what pairs again should we analyze? Let's analyze. Let's do quickly. Let's do gold quickly. Let's do gold quickly. So you can see what happened yesterday. Gold is crazy like that. Let's do a recap of what happened yesterday. So price never even gets to. So I still feel I'm still gonna buy, take out all this liquidity to the upside. Right? We're still gonna buy. We are still gonna buy. We have taken out previous days low, right? Previous days that have been taken out for gold. So we still have liquidity to buy. We still have liquidity to buy. This is high and this is low. This is yesterday. Okay. So what price has done to today and price has taken out today's low as liquidity. All right. Taking out today's low as liquidity. So we expect to see structures. Right? Liquidity has been taken out. What next are we expected to see? Bullish what structure to buy. Is that clear? Going into this liquidity up. So New York section, I wait for gold to give me my structure. I wait for New York section for go to give me my what? My structure. Yeah. But I strongly believe that we are still going to take out, we are still going to take out liquidities to what? This supply. This is a change of trend, right? So I strongly believe we are still going to take out liquidities to this supply. But the market is the market. I'm not the market. We just react. We react to what the price action. So New York section gold. Let's go to silver. Let's see what silver is doing. Did we take this trade on silver yesterday? Silver traders, did we catch this sale yesterday? I told about this sale yesterday. Silver traders, did we catch this sale yesterday? You can see it's just the market principle. Once we are trading inside discounts, we have no business selling. We have to wait for what price to get into premium to sell. Did we catch this sale for silver traders? Silver traders, alpha. Okay. So what are we expecting for silver now? We are still what? We are still selling. We are still selling to this demand for silver. We are still selling. So price still has to what pull back into supply to sell. Okay, price pulls back. Always wait for New York section, guys, for silver and gold. Then we sell. Okay. What pair should I analyze? What pair should I analyze? I'm done already. Let's go to GJ.
Good morning to you. Good morning, students. How are you all doing? I hope you all slept well. And you woke up on the right side of life.
Okay, now for GJ, what are we expecting? We are currently, like I said, we are currently in this supply zone.
Even though you don't wake up fine, you are still in school in our life.
Yeah, we are currently in the supply zone for GJ. We have broken out of the supply zone and we have retested back into it. So we are concerned with what sell opportunities, right?
That will be your market song.
This is a break
Yes.
and what we
Anytime,
test.
I must be prepared for market song. Because that is the most important thing as far as the sales is concerned. Eh? So that is your market song. Is that fine?
So until further notice, we are looking for sell opportunities for GJ because we have broken out of our supply, right? Then we have entered back into our big supply. So we are looking out for what? For sell opportunities for GJ. Is that clear?
In my class.
Is that clear? We are selling until we see a breakout of this to give us a buy structure. Just follow structure. Okay. So let's identify our Monday to Friday. I'll end with GJ and I'll call it today. All right. So yesterday didn't give us much price action. It didn't give us much price action. So this yesterday, if I'm if I'm correct, and lowest points, right?
That's your face. It's sweet. Sorry, I did a mosquito.
Yesterday was JPY on the day, so there was no much thing happening, right? Yesterday was what JPY on the day. So what do you expect today? You expect to see liquidity into supply towards to sell. Do you understand that for GJ?
Okay, what did you change your name?
All right. So accumulation, manipulation, distribution.
How is that name? Sushi. You don't know your name.
Monday is what accumulation.
You don't know your name.
Tuesday manipulation to the upside. Wednesday distribution to other distribution. So Monday is accumulation. Tuesday we are going to expect what manipulation above into supplies and what sell. Is that clear? Monday accumulation. All right. So that will be the end of today's live market analysis. Okay. That will be the end of today's live market analysis. All right. So any question? Any question? Any question? Go. I've done gold now. Where you did? I've done gold now. I just joined in. I've done gold. I've done gold now. I said gold. We are expecting buys. This is yesterday's high, yesterday's low. We have taken out the low of yesterday's liquidity, right? And we have broken out as a structure. This is low, high, higher low, higher high. So we are expecting to see more bullish structures. I've explained gold already now. We are buying to take out this liquidity. So let's see how it goes. Let's see how New York. I love trading during New York because by Asian and London, I'll have gotten my accumulation and manipulation. You understand? It's more safe to trade gold during New York. Why? Because Asian and London will give you accumulation and manipulation. New York is meant for distribution. So I'm going to wait for all the. I'm going to wait for price to give me its movements. Right? Gold is very very crazy like that. But EU, I can just I can trade EU during London. I only need I only need Asian for New York for EU, but I will need Asian and London for gold. Is that clear? To trade Euro USD, I only need Asian range, and I'm good for liquidity, right? But to be safe and trade gold, okay, you need Asian plus what London, so you will not be manipulated. To be safe, so you can trade gold very well. Is that clear? I just said something, Abi. I just said something fireful. I just spewed fire, right? I just spewed fire. Ask questions, ask questions. So, if you're coming for today's workshop, let me see, signify. I need that place to be filled up. Oh. We are coming for today's we are coming for today's workshop at Ikeja. Once you get to Ikeja on that bridge, just walk a bit, just 1 or 2 minutes walk, okay, to Obakran. Once you get down Ikeja on that bridge, the last indicator on that bridge, once you get down from there, right, just walk a bit front. Obakan is just at the front. Is that clear? Or just call me when you get to Ikeda on that bridge. Just call me. Question. Why we call it today? My 1K account. My 1K account is doing push up. Is doing push up. The goal is to, by God's grace, with God's strength, with God's wisdom. I'm saying this publicly because when it happen now, no say I'm not telling now. By God's grace, I'm growing my 1K account to 1,550,000 dollars. The projection is by May next year. I should have achieved this by May 2025. Yeah. Question: if previous daily candle was bearish, how do we have marked it? Do we mark? Yeah, okay. I've said this. Maybe you didn't join when I was saying it. So for previous, if it closes bearish, you mark the low and the close. So this is it. Let me go back to my. I said um, Asian range and daily candle is our two edge, right? So for daily candle, previous daily candle, okay. If you are bullish, mark what high and close. If you are bearish, and I'll give you an example right now. Mark what low and close. So how do we do for bearish? Let's go back to EUSD and let's look for a candle that closed bearish. Let's even do gold. Let's do gold. Let's do gold. It applies to every market. Let's do gold. Now look at, imagine that this particular candle now. Just imagine. Let me pick this one. Imagine this candle closed bearish. Abi Wednesday, 18th of September closed bearish. We now mark our what? Our low and close. You can see how the Thursday bought. So we will have known that Thursday we buy. Let me show us the magic. Let me show us the magic. I mark my low and close for Wednesday and I just wait. This is very powerful. Oh. I wait and I come to what 15 minutes to adjust my previous day candle. Okay. On 15 minutes, watch carefully. So I will adjust this to the New York section of Wednesday. That's 1 o'clock previous day. My focus is Thursday, Abby. I want to know what will happen on Thursday, right? That's my focus. My focus is Thursday, right? Now see the beauty of what I'm talking about here. When price traded, you can see what happened. So many confirmations. Previous day created a demand zone for us. This is drop based rally. Previous day created a drop based rally for us. So let's assume we didn't even catch this demand zone. Okay, assuming you didn't catch this what demand zone. After price got here, what now happened? We broke out of the structure. That's during Asian section now, right? We broke out of the structure to give us a what? Breakout. Assuming you didn't catch all these ones. The day has been declared bullish already. You just wait for what? Retracement. So on 1 hour or higher time frame, you will see retracement or pullbacks. Market will always give you clue of what to do. Market will always give you clue of what to do. So assuming you miss the demand zone, right? Now during New York section, you now wait. You now see price push out.
Do you have anything under me? I'm looking back. I just want to play this one. Thank you.
As price is pulling back, what do? You map out your Fibonacci from your swing low towards swing high. I'm sure this guy used to 50%. You can see the perfect. So what this trade used is what the 50% equilibrium. But my point is, from the Asian section, we know that the day is already bullish. Is that clear, Mr. Albert? So bearish candle, we are going to mark the low and close. Go to gold today. Let's go to gold today. How did gold close yesterday? Gold closed yesterday. Gold closed with a bullish candle, right? Gold closed with a bullish candle. Okay, let's start with Wednesday. Look at Wednesday. The year gold closed out. Gold closed bearish, bullish rather. So we marked our high and close. High and close for this particular day. That's last week, right? Last week. This is last week. After that, you come to 15 minutes. You will always see market giving you structure. You will always see market giving you structure. What are we doing here? We are trading below the previous day candle with a bearish market structure. What do you expect? A sell day. So Asian section will have given you everything you need to know. So that's why I say in the amount of Asian session and previous daily candle, the daily bias is established. We're already giving us a solid sell structure. Just wait for continuous pullback and sell. So during the New York section, what did we see? We saw a break of structure and a pullback, and we sold for New York. So even if you missed out from Asian and London, wait for New York and you get your proper. Look at this sweet sell. I didn't even notice this. This 504 pips. This guy did over 500 pips with just a simple Asian range and what previous daily candle. So let's look at today. Let's come to today. Let's come to today. So how did the previous day close? The previous day closed with a green candle. So what do? We mark our high and close. We mark our high and close. We mark our high and close. So that means if I want to see a sell, pay attention. I must see price giving me a solid structural move on my 15 minutes to the downside below previous day's high and close. That's the idea. So now the question is, what structure is price printing around my previous day candle? That's the question now you're asking. The question now is, what structure is price printing after I've drawn my what previous daily candle? That's all. So for us to buy now, I must see price giving us what structural move to the upside to buy. If not, if I see that during Asian and London, I'm seeing a bearish structure, then I'm selling. I'm not the market. So my job is just to mark out my location and what and wait. I think I have tried. This is gold for today. I think I have tried. So let's see in the workshop this morning. I have to go and get set and prepare now. So the workshop starts by 10. I don't try now. So I don't try. I don't try. I don't try. So let's call it a day. What's this? So I think I go for today. Yeah, I don't try. Yes, thank you so much. So I want us to bring in our friends, invite. I said that if you are getting this for free, so what we now get in the mentorship? It's not. It's not. It's not beans. So invite others. Let them know what you are getting here. Okay. So I will see you guys at the workshop. I need to go and prepare now for the workshop. Right. So invite on traders by December. Right. So that means every one of us is entitled to 10 people each. 1,000 traders. So is either they are trading or they are copy trading, so they are investors, okay, or they are partners. So we need to raise this community. We need to grow. We need to grow. So every one of us is entitled to bringing in at least 10 persons. Now, for mentorship, not for, of course, they'll first join the free classes. Then the intention is for them to be in the mentorship. All right. I don't want those that want to, like, I love what that guy said yesterday. He said skill first and then money. Skill first and then money. So if they want to make sharp, sharp money, they should go and do partnership and copy trading. They'll make money like immediately. But those that want to learn the skill are those who are interested in it. So can I end the stream now? Am I good to go? Am I free to go? Are we good to go? Okay, all right. Start the workshop. Have a great day.